Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 15th of June 2015. Please make sure that you have read and understood these disclaimers before we take a look at the markets. I thought I would spend just a few minutes speaking in today's video about the South African market. I am South African, as you probably know, and I still trade the South African market. I started trading, of course, in the South African market, South African shares, and this is a data of the South African market going back to 1985. And I really enjoy analyzing the South African market and comparing it to the analysis of the American markets. I think it gives me a huge amount of insight. Because the South African market is a third world emerging market in terms of the definitions of markets, and so it moves slightly differently to the US or European markets. It's a very interesting market to analyze, in my opinion, and so there are a few interesting points to note. The one obvious thing is that it looks very similar to the analysis that we're seeing in the American markets. You know, here's the big trough of probably about 9 years. This analysis has a trough of 9 years in March of 2009. In fact, it has the trough in October or November of 2008, similar to the Nasdaq. Interestingly, the Nasdaq formed a slightly lower trough in October, November 2008. And in the South African market, I've just left that as the actual trough. We'll zoom in a moment and take a look. And this data series goes back really far to the trough in early 1988. That was a trough of at least 9-year magnitude. The next 9-year cycle trough was over here in 1998. Then, of course, we had the trough late 2008. And the next 9-year cycle trough is expected somewhere here, 2018, of course. You can see the average length. I don't know if you can see it anymore. I've drawn over it. But the average length of the 9-year cycle in the South African market is 10.4 years, so just over 10 years. Let's take a quick look. Let's just zoom in and see. First of all, I think it's quite interesting. Let's just look at this on a weekly scale. Here is the 1987 crash, Black Monday. What was that? 19th of October. You can see if we do that, that's the 19th of October, and that's the sort of the big crash that happened in 1987, which came down finally to a trough in the South African market in February of 1988, which this analysis has marked as a trough of the 9-year cycle. And here we go. Let's just zoom in and have a look here. This is the slightly lower trough over here. Let me just draw it for you. Slightly lower trough over here for that's November 2008. So that's the 9-year cycle trough, similar to the Nasdaq, as I've mentioned. Price bounced up, had a bit of a sort of a false start, a neutral shaped cycle, interestingly, which is something you often see at the formation of very long cycle troughs. And then, of course, the market took off. We have the 4.5-year cycle trough over here in April of 2013, slightly different to my analysis of the US markets, which has that 4.5-year cycle trough late in 2012, November 2012, I think. Let me just get rid of these semicircles, which get a little bit confusing at this scale. So here is our 4.5-year cycle trough in is that April 2013, and here is an 18-month cycle trough in October of 2014, just as we had or have in the US markets. And so now if we zoom in, you can see the analysis that I favor here is with the 18-month cycle trough over here in October of 2014. Then you'll see a 20-week cycle trough over here towards the end of March. So now this is where the analysis differs with the US markets. And I'm not going to spend too much time talking about all the details, but I do think it's very interesting to compare an emerging market with the US market. You get similar price movements, similar cycles, of course, but sometimes the position of the trough just becomes that much more clear. I hope you can see that. That's a really obvious position, I believe, for the 20-week cycle trough. And let's just count the number of days. So if we count the number of days there, you'll see there were 161 days. The average length, the nominal average length of the 20-week cycle is 136 days, so it's a slightly longer cycle than average, but nevertheless a good position, in my opinion, for the 20-week cycle trough. And let's just zoom in and have a look at what has happened since then. Here you can see that we have been expecting an 80-day cycle trough, and that 80-day cycle trough possibly formed last week. There is the good 80-day cycle trough. And you can see a nice clear M shape here. The M shapes are really very clear, I find, in the South African market. Good clear M shape for that 80-day cycle. Do you notice something about that M shape? It is a slightly bearish M shape. Not very bearish, but it does indicate that the bear is beginning to take hold, I believe, of the South African markets. What happened in terms of price interacting with that FLD? Well, you can see price came up on Thursday. Let me just zoom in and we can see that more clearly. There we go. Price came up on the Thursday. I'll leave that unselected. Price came up on the Thursday and didn't quite touch the FLD, and on the Friday also didn't quite touch the FLD, so it's still below it. It'll be interesting to see what happens today, but I am certainly expecting price to bounce out of this 80-day cycle trough. It met resistance at the level of the FLD, there's no doubt about that, but it is expected to cross up above it. Anyway, I hope that you found it interesting to take a look at a different market. Emerging markets, I think, are very interesting because they provide a slightly different analysis, and you can often turn to an emerging market for clarity when there isn't clarity in the first world American or European markets. And certainly I think that this analysis shows that the 80-day cycle trough, or at least a fairly good cycle trough, is definitely expected to form round about now, and might well have formed last week, despite the failure of price to cross clearly above the 20-day FLD.